Hello, this is Compound Interest Stock Guy. Today in this video on the dark side, on my drive back, I'm going to be talking about ZENABIS. This is part 1. I may do a part 2 if I don't get all my points across. So, stay tuned for the part 2 series. But I wanted to share my knowledge that I've learned from, being on Insider. CEO.ca. So I've learned a bit from different people in that group, and I just wanted to share some intel that I've learned, as well as just my whole opinion on ZENABIS moving forward. So stay tuned. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and you like the investments you're pursuing. So, alright. So, I think, honestly, ZENABIS is the most controversial stock in the TSX, in the cannabis sector as well. I think ZENABIS is the most controversial stock out there. And there's a lot of reasons for that. Is to do with the fact that it went to like $6-7 and then it came back down, and now it's trading around 14 cents. That they raised money at 15 cents through the rights offering, all these little things. I'm just going to summarize my opinion. So I think it's a very interesting story. I'm been accumulating a lot of shares around under 20 cents, and there's really no other company in the whole cannabis space that I feel has as much potential. I mean, maybe Valens, maybe that would be a bigger for risk. Not for less risk and more reward, but in the near term, I'm talking about the next 6 months, I think there's no real company that has as much potential as ZENABIS right now. And the reason why I say that is because they have a line of capsules. So now they're going to be in Shoppers Drug Mart. They already released order to Shoppers Drug Mart. This is what I heard through the people on CEO.ca. So there's only 12 LPs in Shoppers Drug Mart. They're also with Pharmasave. They have a deal with Pharmasave. So they grow very inexpensive. Whenever I go to the dispensaries, like yesterday I was seeing this blonde girl there, and she was buying re-up, I believe. I know it was ZENABIS. I'm about 99% sure it was re-up. She bought another thing. It might have been re-up as well. But there's people that are buying the Namaste products. The people that work at the dispensary, they know it. They're not like, oh, what's that brand? Like when they're looking around, that they sell lots of ZENABIS product. The way I was hearing it, they were very bullish on Aurora. They don't invest into these stocks, but they think that Aurora will be like the Budweiser of cannabis. So that's what I got out of it. But that's in time. But this is about ZENABIS. So I just kind of going off on a tangent sometimes. But okay, so they're gonna be growing more and more and more. They made a few mistakes, with their packaging, with their capsules. So I believe they get the same capsules made from the company that Aurora owns 20% of, and that's called Capsium Inc. And Capsium is in Montreal, and they had a deal with them back in 2018. So it's a really interesting story on ZENABIS, okay? So the CEO right now is Kevin Koft, okay? So in 2018, who was the CEO? Oh, it was Kevin Koft. So I kind of find it very interesting that Andrew Grieve was the CEO for a year, and then Kevin Koff's back as the CEO. I mean, it was like, why didn't he want to continue to be the CEO? So that's the question mark that I have. And what I think is because Kevin Koff, they knew that they had to raise so much money because they want to accomplish their goals and get to 100,000 kilograms a year plus, and they had to do things that aren't necessarily shareholder friendly. Dilute, they spent a lot of money on construction, and things like go through the growing pains of all that stuff. And I don't think Kevin Koff wanted to be in that position. I don't think he wanted to be in that position. I think that he put Andrew into that position because he realized that, this isn't going to be a very popular situation, raising all this, and he knew that the share price was going to go down because with dilution, that's just a fact. When there's more dilution, it's easier to pull the stock down. And so, they put them in front. So now, where is ZENABIS right now? ZENABIS, because they did the dilution and now they're at about 400 million shares, they still have some debt on the books. But if they start producing monthly net income or EBITDA positive, I think they can restructure their debt. But there's also a chance that they could also dilute down below like around 10 cents or something like that and have all that debt be converted to shares. I don't really know what's going to happen, but I can tell you that ZENABIS is one of the best positioned companies in all of Canada as far as to get a very profitable business, because they ran a propagation business. A propagation business has tighter margins than cannabis. So once they're done all their construction, they seem like they still are sort of working on Langley a bit here and there, so there's some expenses on that. But as soon as that gets complete, the Alphaville, the money that they're getting from Alphaville, I think that Alphaville is making them tons and tons of money, and that's really their knight in saving armor, knight in shining armor. That's the word. And Alphaville is really keeping them afloat and really continually grow their business in the right direction. Without Alphaville, I wouldn't have a position in ZENABIS. Hell no. Because I know that they're growing around like anywhere from 3,500 to 4,000 kilograms right now a month. So if they're able to sell even like 2,000 to 2,500 kgs a month, I'm okay with that. And then a bit of money from propagation from time to time, and then they're gonna grow in a few months. I'm sure they'll get up to like 5,000, 6,000, 7,000 kilograms a month. Maybe 6 would be the max, 6,000 or something, until maybe the end of the year, where they might get up to like 8,000 or 9,000 growing a month. But I think it's going to take some time. But still, I mean, 10,000 kilograms a quarter is pretty impressive. And so, there's they don't have the best brands as far as their gel capsules, but they're not selling that much. But with Shoppers Drug Mart, they can sell a lot of that stuff, and they're still selling it, but they're not selling as much as Aurora is selling, or Med Relief from Aurora. So, but they're gonna have their spray coming out into BC. That's across Canada in different provinces. I believe in Manitoba in New Brunswick and other provinces. So they're really, they're doing their thing across Canada. They're getting their name known, and they're getting market share. And market share is something that's underrated in companies that aren't in the top. I'm talking about Kronos, CANNABIS, Aurora, Afria. When you talk about other companies, as far as them having market share in certain provinces, I think the value on those enterprises is very low. When you're talking about Village Farms, they're getting about 15% of the flower sales. That's pretty fucking impressive, because Ontario will grow, I believe, to a $1 billion province per year. So that's going to be very good for Ontario. And I believe that about at least 350 to 450 million would be in sales for flower. So if they're getting 15% of Ontario, there's other provinces that they're getting good market share as well. So that's what ZENABIS doesn't get the value for. They don't have the value for, they're getting market share in New Brunswick, they're growing market share in BC, they're growing market share in Alberta, and now they're going to be growing it in Ontario. So I believe it's been heavily manipulated, and I'll get more into that in part 2, so stay tuned. Hope you enjoy this session. Don't forget to give me a thumbs up. I do truly appreciate it. Leave a comment down below. Let me know. Shaka, peace, and part 2 is coming up.